Live from Bloomberg's World Headquarters in Midtown Manhattan, I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, what happened? Sam Bankman-Fried posts a series of cryptic tweets as the industry deals with more fallout. We'll discuss with Antonio Juliano, founder and CEO of decentralized exchange dYdX.
And a power vacuum in the push for crypto regulation. Where do lawmakers stand after the collapse of FTX? We'll speak with former acting chief of staff to President Trump, Mick Mulvaney.
Plus, defying the gloom, Wall Street partners with the New York Fed to test out digital dollars despite the recent market upheaval.
The market has indeed been upheaved, Matt, but it seems we're stabilizing after what has been a very, very volatile last week or so. Right now, Bitcoin is up about 3.7%, rallying really in tandem with other risk assets after we got a PPI print that came in cool, just like CPI did. Right now, Bitcoin hovering just below that $17,000 level, while Ether, also partaking in the gains, is trading at $12.66 at the moment. Of course, Solana has been one of the interesting ones to watch, given its close ties with FTX and seen even more extreme volatility. But it too is higher by about 3.6% today. And really just there is nowhere in crypto space that hasn't been touched by some way in this, Matt. It has rippled all across it and has also led to volatility within crypto-related equities like Coinbase, a rival exchange, really the biggest one that is public. It is up 7.4% today, but it has been up and down as we digest each and every headline that continues to cross with this FTX saga, Matt.
Yeah, and of course, those assets rising and falling with risk sentiment as well. They're very highly correlated and now very volatile. Once again, there were weeks in which we thought Bitcoin would never move off of $19,000 or $20,000 again. This is a great chart. It goes all the way back to the beginning of 2020. You can see that the volatility, that's the bottom panel here, the 30-day volatility, has now risen back up to levels that we haven't seen since Bitcoin hit its all-time high around the end of last year. The FTX debacle, of course, boosting that volatility, drawing attention as well from big-name investors around the world about what went wrong and where we go from here.
FTX is one of these absolute travesties in the history of financial markets.
It's important to talk about this transparently so that other people don't make the mistake.
People are going to lose billions of dollars, and that undermines trust in all financial markets.
I was looking and I was doing a lot of due diligence on him, but clearly not enough.
There's no doubt that customer assets were used to make investment decisions in favor of FTX's shareholders, which didn't work, at the expense of the customers.
If you're running a background check on somebody like Sam, you're not going to find anything. He was unblemished, if you will, prior to this incident.
You find no regulators were there to prevent it.
Yes, you need regulation.
The turf war by American regulators has got to end.
You can set things up without the right guardrails and cause a lot of damage, which is happening right now.
Ken Griffin and the Mooch speaking, by the way, at the Bloomberg New Economy Forum in Singapore. Meanwhile, the latest in the FTX saga, a lawyer for Voyager, going through its own bankruptcy, says the FTX deal to buy its assets is now void. And the Wall Street Journal is reporting that crypto lender BlockFi is preparing for its own potential bankruptcy, filing after acknowledging it is significantly exposed to FTX and halting withdrawals, of course, last week, as we told you. Bloomberg Sonali Basak joins us to break down the latest in the saga. Sonali?
We're going to try to calculate the contagion here because investors are not expecting much in terms of recouping their funds here. A bankruptcy filing, a Chapter 11 filing, had showed that they expect about 1 million creditors here tied to FTX that has very little hope in getting their money back. Now, if we take a look at the early days of the saga, one by one, funds and brokerages are disclosing the money at stake with FTX. And for some of them, like Mike Novogratz's Galaxy Digital, a $77 million exposure is only 4% of that firm's capital. But for others, like Galos Capital, the famous hedge fund that warned of the pending doom of the Luna token that collapsed this year, the exposure is much more significant relative to assets. Novogratz told me that he believes many hedge funds and protocols could fail if those protocols had kept their treasuries at FTX or other exchanges that may start to face more hiccups. And as this contagion is calculated, Binance CEO Changpeng Zhao said he is seeking to form an industry recovery fund. And that's an idea that's met with some camaraderie, but also some skepticism. Justin Sun of the Tron Network said his affiliated companies support the idea, but others like Peter Schiff, an investor who believes the promise of blockchain is there, he said it's not a good idea to be throwing good money after bad. In the meantime, fingers are pointing everywhere. Both individual and professional investors are poised to collectively lose billions of dollars, while regulators are racing to keep up and authorities across the U.S. and Bahamas are untangling FTX founder Sam Bankman-Fried's empire. Where a Bloomberg assessment of the company's balance sheet has shown very few liquid assets to recover, there are also questions behind why venture capitalists enable the empire to grow so quickly without seats on the board or a better view of the company's finances. And in that way, the contagion has spread to a much bigger group of investors who may have to change the way they do business. They now have to answer, how did this happen in the first place?
Yeah, absolutely. Shonali, thanks very much for that. Shonali Bassick breaking down the latest for us. Let's get to Antonio Juliano, founder and CEO of decentralized exchange dYdX. And Antonio, it seems like decentralized versus CeFi, centralized finance, is the problem here, the latter of which failed so many. What do you think happened at FTX?
Yeah, I don't have any particular insight beyond what a lot of people have already talked about. Obviously, it was a failing of transparency, first and foremost. Users didn't have an understanding of how their funds were used, and there were no guardrails in place. I'm really excited about what we're building at dYdX because it's literally the answer to a lot of these problems. With DeFi, you're built on top of smart contracts, which are programmatically enforced, transparency and security of funds. So something like this never could have happened on a DeFi platform built in the right way.
Well, but what we've seen globally with crypto exchanges and centralized ones as a result of the collapse is billions of dollars worth of outflows. What kind of activity have you seen over the course of the last week?
We've actually had a pretty big influx of new users to dYdX. I think a lot of these events really underscore the need for decentralized finance and what we're building. And I think when one of the biggest and most trusted exchanges in the industry blows up, people pay attention to that, and people care a lot more about the safety of their funds. And I think that will continue to drive a lot of people to DeFi over time.
Yeah, is this whole episode really just an argument against any centralized entity within crypto? Is this now just going to drive people to want to hold their own assets rather than entrusting it to someone else?
I definitely think it will. And I do actually think that regulated centralized exchanges can work as well. Big fan of Coinbase. I used to work there. I still stay in good touch with them. But I think DeFi offers another solution where we can trust the code rather than trusting intermediaries. And I think that's a really powerful new paradigm that's being built. And I think you kind of see the narrative play out for this over a long time.
And that was,
I think it's hard for people
that was the whole point, Antonio, right?
Exactly,
at the beginning,
yeah.
I mean, it was about a trustless solution. And I get why there's a need for some place like Coinbase. A lot of people just want to dip a toe in the water. They're too lazy to hold cash in their own wallet, so to speak. But for the for the innovators that started this, the idea is you hold on to your own private keys, and then no bad actors can go and spend your money without you knowing.
Yeah, well said. And I completely agree. And I think with the invention of Bitcoin, we invented decentralized trustless money. But finance is a lot more than that, right? You need exchanges, you need derivative products, you need margin. And we're all building that kind of for the first time in DeFi. But this really is the vision. And I think this is the answer.
Can you make money with dYdX? I mean, the problem or I guess the draw of an FTX was it was so much more lucrative than a Coinbase, at least until it crashed. Can you make money on a decentralized platform?
You definitely can. Actually, at dYdX, we basically offer the exact same product from a financial perspective that FTX, Binance, and others offer in perpetual contracts. And those are by far the most traded type of product across the entire crypto industry, even more than spot trading. So it's financially very similar. We're working really hard to kind of make the product experience for DeFi on par with CeFi. I think that takes a while just with any new technology, but we've continued to see really good growth year over year. and excited for what's to come. And I think this just underscores the need for what we're building in a big way.
So, Antonio, if we got a look at your balance sheet, like we saw the very crude balance sheet of FTX, what would we find?
So you could do it right now in 30 seconds. Just go to Etherscan, type in the dYdX smart contract. You'll see exactly the token holdings. You'll see our open source code. It'll link to our audit reports, and it's literally transparency by default. And that actually excites me a lot about DeFi, because when we talk about something like this, the initial knee-jerk reaction is to regulate and potentially over-regulate the industry. But actually, DeFi can be really positive for a lot of regulators' objectives, and like I have said, would literally solve this. And I think not only can it be positive for regulators' objectives, it can in some ways be 10x better than the existing financial system. Like, what business in history can you go in 30 seconds and audit their entire balance sheet in real time, updated to the second? I think that's pretty novel, and I think just what's happened really underscores the need for this.
Do you think it's more likely, though, that regulation overreaches, reacts too strongly to an episode like this? Or do you think that there can be the correct balance struck between allowing innovation and also regulating it at the same time?
It's definitely something I'm concerned about, just over-regulation of the crypto industry and specifically DeFi in a big way. We've been doing a lot of work just kind of starting to talk to policymakers, talk to regulators, and really just trying to start with education, like what is DeFi? How can it be positive for regulators' objectives? But I think we're in the very early stages of a lot of those conversations, and I think there is the temptation to over-regulate. We're really in DeFi for the long term. I just honestly think that DeFi will be bigger than centralized finance at some point in the future. I think that point in the future is going to take longer than people think. Usually I say that DeFi, I think, will be bigger than centralized finance in probably 10 to 20 years from now, which is a long time. And we have a long way to go, but I think we're building towards it step by step.
And a lot of people will, even skeptics, admit the utility of the blockchain and the value of something like smart contracts and possibly your platform as well. It's a little bit more difficult to convince people of the intrinsic value of a lot of the coins, specifically Bitcoin. What's your take on how much Bitcoin is worth?
It's a great question. I don't have a lot of info on macroeconomic trends. I think that if you look at year over year, it continues to increase, just the overall adoption and excitement around cryptocurrency. I mean, it's even reflected in the explosions of cryptocurrency. FTX is certainly not the first centralized exchange to blow up or do sketchy things with user funds, but it's gotten 10x bigger year over year. And I think that trend will continue. Obviously, we're in a bear market right now, and that will probably last longer than people think. But the general trend is up and to the right, and I'm excited about that.
Antonio, great to get your insights. Thanks so much for joining us. Antonio Juliano of dYdX. Now, coming up, we're going to get deeper into regulation with Mick Mulvaney, former acting chief of staff for President Trump.
And Wall Street partners up with the Fed to test digital dollars, defying the FTX gloom. We'll have more on that plan ahead.
Plus, you can access all the latest data and news on crypto on your Bloomberg terminal. Just check out CRYP Go. This is Bloomberg.
Another priority is monitoring the risk of crypto asset-related activities. Crypto asset-related activity requires effective oversight that includes safeguards to ensure that crypto companies are subject to similar regulatory safeguards as other financial service providers.
That was Michael Barr, Vice Chair of Supervision at the Federal Reserve. Barr, of course, wasn't the only one to speak about crypto regulation this week. I want to highlight one note I saw in particular. Terry Haynes of Pangea Policy said, quote, "No one in Congress is going to want to touch crypto or look like its defender. New reality, regulators move to center stage as Congress lets them do their jobs." Joining us now is Mick Mulvaney, acting co-chair and former acting chief of staff for President Donald Trump, who now obviously is involved in the crypto space.
Actum,
yes. Reading the prompter. Mr. Mulvaney, thank you so much for joining me today. Really appreciate it. Since the last time we spoke, a lot has changed in the crypto world. You and I were having a conversation just a few weeks ago, along with our colleague Tom McKenzie at Bloomberg, about the prospects of legislation coming from Capitol Hill, which seemed like it made progress this year. Now it's a giant question mark, post-midterms considered as well. What do you think the odds are that Congress is going to be able to move on this in the near term, or is now everyone going to be a little frightened about the prospect?
Yeah, that quote that you just showed is sort of correct. Generally speaking, when you end up with a mixed Congress, like it looks like we're going to have, Republicans in charge of part and the Democrats in charge of another, is when the executive branch sort of kicks into high gear. So down at the White House, they're saying, well, we can't get our agenda done legislatively. Now, what can we do through the executive branch? What do we do through the agencies and the secretariats and so forth? And that's typically what happens. And generally what's happening right now. Crypto, however, might be the one example. The reason I'll push back on that quote you just showed is that there's very few things in Washington right now that are bipartisan. But in talking with Patrick McHenry, who's likely to be the House Financial Services Chairman, Tom Emmer, who's the head of the Blockchain Caucus, there's actually bipartisan support for some type of crypto legislation in this next Congress. It's a very short list. It's bipartisan, maybe something on China, maybe something on big tech, and maybe something on crypto. But there may actually be a prospect for some legislation moving forward, which I think is better and will be more even-handed than something that comes out of the agencies.
Okay, so you think something could move forward. Is that going to be less friendly than it maybe would have been before?
A little bit. There'll be the pushback. That there's going to be folks who recognize that regulation might not have stopped the FTX thing. If it's fraud, and I'm not saying that it is, I don't want to defame anybody, but if it's fraud or extortion, that's already against the law, and changing regs doesn't change that. But there are people who want to pull back on crypto, and they will see this as an opportunity. Washington, D.C., both parties know the old maxim, don't let a crisis go to waste. So there are people who don't like crypto who are going to see this as an opportunity to try and get something on the books that is more restrictive than it needs to be. But I still think that center of gravity is that this is bipartisan. It's not been associated with one part or the other yet. It's not ultra politicized like so many things are in Washington. And you might get a decent piece of legislation in the next 18 months.
We were just talking to the leader of a DeFi platform, and a lot of people maybe don't know that after you served South Carolina and then the United States of America, you have been advising as a strategic advisor, I think, to the Astra protocol, a DeFi platform as well, with a token. ASTR is the symbol. Do you think DeFi offers a way for, safely regulating or safely avoiding these kinds of catastrophes that we've seen at FTX?
Yeah, and the guy from dYdX was spot on. The only thing he didn't say was that when you look back over the last several years, all of these major meltdowns have all been in the centralized area, right? DeFi doesn't do this. By its nature, it makes it really, really difficult for this to happen. And he's spot on correct. The issue is, how does DeFi go mainstream? That's where Astra comes in, because you can sort of be DeFi all you want to, but if you want to be a major player, if you want to be a real financial services provider, you're going to have to sort of figure out a way to get yourself into the existing regulatory scheme. That means know your customer. That means anti-money laundering. That's the stuff that DeFi can't do now. DeFi is really good at preventing these major types of meltdowns, but they're not good yet at playing by the rules, which is one of the things that Astra can do. So I do think there's a great future for DeFi. I agree with the young man from dYdX that by the time he's my age, decentralized DeFi might be bigger than the ordinary financial services market. But it has to grow up now. At some point, it has to learn to play by the rules that are both here now and that are inevitably coming as a result of FTX.
Exactly. And then how are we as consumers, or how are regulators in Washington, to separate the properly written decentralized finance protocols that will guarantee financial safety for everyone involved from the rug pulls and, Ponzi schemes that have been written about so broadly?
And how do you keep, more importantly, I think your question is this: how do you keep from doing the wrong type of regulation? The industry's been asking for regulation since I started the Blockchain Caucus in 2013, believe it or not. We were just looking for guidance on what is crypto? What type of asset is it? We've been asking that question now for almost 10 years. I think your question is that how do we make sure the regs that we get and that the industry needs are the ones that promote stability, promote growth, and don't retard the industry? I do think there's a chance for that. There's not a lot of people on the Hill who understand this space, but there's enough now, thanks in large part to the industry outreach, to sort of understand what's going on, to make sure that we don't screw this up too badly. Again, am I being too optimistic? Maybe. but I know a little bit about Washington. I do think it's a chance to do this properly.
Well, you talk about industry outreach. A big man behind that was Sam Bankman-Fried. He was a massive donor in the midterms election cycle. He was a vocal advocate for more regulation, specifically the CFTC having a larger role. It seemed his voice was being heard. I wonder if that changes because of any trust that may have been lost over the course of this episode, and if ultimately it's going to be putting more power back into the SEC's hands just because SBF was advocating for the CFTC.
That's real. There's no question about that's just human nature, right? If you lie to me or you try and sell me something, then you end up, being a complete, criminal, then I'm not likely to believe you again next time. That probably makes sense. But the reason I'm a little bit more sanguine about that is that, Sam was on the Hill a lot. He got a lot of the attention because he's one of those types of personalities, right? There's folks on the Hill every single day trying to educate their individual member of Congress, their chiefs of staff, the staff folks. There's a group called the Digital Chamber of Commerce that I've actually been involved with now for several years, in some ways since their founding, that are doing this outreach every single day. We're doing a decent job as an industry. The industry is growing up. There was a bill, I think, 2 years ago that we were working on in the Senate, and somebody wrote me and said, I want you to go tell Senator Portman to go F himself. And you know what? That's just how it works in Washington, D.C. You have to sort of recognize that you want to be a more mature industry, and DeFi and crypto blockchain are getting there, and I think it's going to serve them well in the long run.
All right, Mick Mulvaney, thanks so much for joining us. Really appreciate your time. Formerly at the White House, formerly in Congress, then at the White House, and now advising Astra and at Actum as an advisor and helping businesses and governments around the world. Be sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Lines with Matt Miller. Now we want to talk about a crypto story that caught our attention this week, other than the FTX saga. The New York Fed will partner with almost a dozen banks and financial institutions to test out digital dollars, a sign that Wall Street intends to push ahead with its cryptocurrency agenda. Citi and Wells Fargo are among the 12 banks participating in the 12-week test, and it really comes back to this digital dollar versus existing stable coins like Tether conversation we continue to have, Matt.
Yeah, and they make a serious point to call it a regulated network, and they're going to use the ledger at the Fed. I want to also point out that if you're looking at TradFi right now, you may have seen the S&P 500 fall off a cliff. Just a few minutes ago, it came down from 4,010 to 3,980. It's now bouncing back up a little bit and still in positive territory. This is Bloomberg.